Today, Bitcoin and Ether are on the rise as investors look to fend off crypto's recent selling pressure. Binance announces a new co-CEO to lead alongside Richard Teng. And Coinbase's Paul Grewal is headed to DC to talk to lawmakers about crypto legislation. We sit down with him to hear what he wants to see in the Senate's market structure bill. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Cryptocurrencies on the rise this morning. As of noon Eastern, Bitcoin rose 1.5% to the $92,000 level. Ether climbed 3% to $3,088, and Solana was trading at $140.73. Taking a look at a Bitcoin mining stock for a moment, Trump family-linked American Bitcoin is recovering today after cratering about 40% yesterday. Eric Trump, the company's co-founder and chief strategy officer, took to X to say the volatility comes from early investors whose lockup period just ended. Okay, let's talk about the top stories. Binance has a new co-CEO. The company announced this morning that it tapped co-founder Yi He to lead alongside Richard Teng, who took over after CZ stepped down in 2023. He co-founded Binance with Zhao and most recently served as head of marketing for the world's largest crypto exchange. In a post on LinkedIn, Teng said that together they will, quote, continue building a more resilient, transparent, and long-term ecosystem for digital assets. Next, BlackRock CEO Larry Fink sat down with CNBC's Andrew Ross Sorkin at the New York Times Dealbook Summit today, where he doubled down on his belief in Bitcoin. BlackRock is, of course, the largest issuer of the spot Bitcoin ETFs, and Fink said he still sees a large use case for Bitcoin to this day, as the asset manager sees more and more long-term holders of Bitcoin. At the same time, Fink weighed in on the growing trend of tokenization, saying it could reduce costs and simplify the financial system.
There's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet and have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is going to just reduce huge friction costs, making investing easier, simpler. You could, as the secretary was talking about this one account, you can do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
Coinbase CEO Brian Armstrong was also on stage with Fink and Sorkin, and he spoke about the crypto exchange's huge push in Washington to pass crypto-related legislation.
Well, our mission is to increase economic freedom in the world, and I prefer to do that just with our products and integrating crypto into the traditional financial system to update it. But it turns out over time that a big way we can accomplish our mission is actually holding bad government accountable, right? So if there's 52 million Americans who have used crypto and they want to see clear rules on the books to protect consumers, I think in the last administration, we saw that our representatives in government were not actually fulfilling those values that the American people had. They were actually unlawfully trying to kill the industry. A lot of it went offshore as a result of that, and a lot of consumers got harmed. And so, we've always been very transparent about donations we've made to super PACs like Fairshake, but we also helped bring together a large number of voters to elect pro-crypto candidates. And to me, that's democracy working.
Let's stick with Coinbase and its lobbying efforts for our main story. Market structure legislation is expected to be in focus on Capitol Hill as we close out 2025. And Coinbase's chief legal officer, Paul Grewal, sat down with Crypto World's Talia Kaplan before heading to DC to be part of those conversations. He explains what he hopes to achieve during those meetings and provides his outlook for crypto regulation as we head into the new year.
We're here now in Englewood Cliffs, New Jersey, CNBC's headquarters, but earlier you were at the New York Stock Exchange in Manhattan, where SEC Chair Paul Atkins rang the opening bell. He also facilitated a meeting and you participated in that meeting. What was the big takeaway for you?
Well, it was a privilege to join Chairman Atkins and other corporate leaders to talk about how to make the IPO process and the process for life as a public company more efficient, more effective, better for investors and better for companies. The chairman laid out a very strong vision for reforms that he thinks will improve the process for all concerned. And it was a delight to not only listen to his remarks, but share our views on ways that tokenization and other elements of digital assets and crypto can help with that.
Speaking with CNBC Squawk Box, SEC Chair Paul Atkins said the agency is on track to allow for innovation exemptions for crypto activities sometime next month, it's looking like. What are you hoping to see there?
Well, what's exciting is that we have an SEC chairman and broader SEC leadership that is really focused on how do we bring more Americans into the public markets. And we do think that crypto can offer some important solutions to the problems that have plagued the system for too long. Fortunately, the SEC has long had pathways for companies under Regulation A, under the crowdfunding rules that allow for less mature, more innovative companies to offer access to equity in their firms through these exemptions and other forms of registration without bearing the full costs of life as a public company. We think we can leverage those available pathways, but improve them through tokenization and other efforts involving crypto that will lower the cost of life as a public company and allow companies to develop the muscle and skill to thrive in the public forum. It was a real delight, honestly, to hear the chairman focus his very limited and precious time on these topics. And I think the reception that we heard in the room, and hopefully far beyond it, suggests he's going to succeed.
Now, as we mentioned, you're actually here in the tri-state area now, but you're heading to DC, where you're going to be meeting with lawmakers on Capitol Hill to discuss crypto regulations, specifically crypto market structure, which is a big priority for Coinbase, as we discussed in several of our prior conversations. So, you know, a lot of people in the industry were hoping that we would see advancements for crypto market structure by the end of the year, but then we saw the longest government shutdown in history. So what happens next?
Well, market structure legislation is a big priority for Coinbase. It's a big priority for the crypto industry as a whole. And it really is important for Congress to finish the job that it started earlier this year when it passed historic stablecoin legislation. That's something we refer to as the Genius Act. I'm hopeful that the last 10% that remains in dispute and in discussion can be resolved, because we have done 90% of the hard work. We're very close to getting a consensus on a bipartisan basis on basic rules for crypto that have long been overdue.
Now, there are reports that a markup session on a bipartisan crypto market structure bill will take place either next week or the week after. Do you have any insight there?
I do. It's very clear that Democrats and Republicans on both the Banking Committee as well as the Agriculture Committee have been working hard in the Senate to, again, find areas of commonality and address areas where they may still disagree. I give a lot of credit to Senate Ag Chairman Bozeman as well as Senator Cory Booker for serving as real strong leadership on the issues that are of greatest concern and interest to each of their respective caucuses. And we think that the markup that will come in the next, hopefully, few days will reflect the consensus that they've been able to forge and provide a vehicle and a mechanism for resolving any outstanding questions that have not yet been resolved. The good news is, on the basic question of what is a digital asset security, how do we distinguish securities from commodities, what's the appropriate authority of the Securities and Exchange Commission as opposed to the Commodity Futures Trading Commission, there is a bipartisan consensus emerging, and we do see commonality that we think will carry this bill forward, hopefully all the way to the president's desk for signature.
So last month, the Senate Agriculture Committee released its part of a draft of crypto market structure, a bill for crypto market structure. In it, the text calls for the CFTC to have more regulatory authority over crypto. Absent from the text, any clear guidelines really related to DeFi protections. Did you read that draft, and what was your take on it?
Well, the draft that was released most recently certainly had some blank space that remained that the committee in particular would have to work to fill. DeFi is a critically important topic. Coinbase and others in crypto have been focused on protecting DeFi and making sure that this important innovation, even within the broader innovations of crypto, is protected. It's a position for Coinbase that, frankly, we've held for some time and put great resources to defend. In our now, I think, well understood litigation with the SEC going back a couple of years, we were perhaps most proud that we were able to secure a victory in that case protecting DeFi wallets. And we think that the language that will be hammered out in the pending bill should and almost certainly will protect DeFi so that, again, innovators in this space can continue to operate, room to operate and freedom to develop all the important technologies that we need.
So you're meeting with lawmakers on Capitol Hill, and I'm just wondering what's on the agenda? What are you hoping to achieve during these discussions in Washington, D.C.?
Well, I think it's important that lawmakers understand that the 52 million Americans who have owned a digital asset at this point in time are expecting them to act. It can be tempting, particularly late in the year, and with all the progress that we've made to date on crypto, to push aside the progress that we've made and defer the last remaining decisions, that last 10%, until the next session into the new year. That I don't think will satisfy those 52 million Americans, and we want to remind lawmakers that not only do those who have owned digital assets expect this legislation, those who have concerns about crypto also want to see legislation. Certainly the president's made it very clear he expects to see legislation on his desk to sign, and we think we can work with them to get them over those last few hurdles and get something ready for the president's signature immediately.
So you say immediately, but as we are in fact approaching the end of 2025, it seems more and more unlikely that will happen before the end of the year. What's your outlook for crypto regulation in 2026, especially as the new year approaches, and especially as the midterms are approaching?
Well, whether we are able to actually get text enacted into law before the end of this calendar year, or it perhaps may slip a few weeks or a few months into the next year, it's important that the momentum that we've been able to garner up until this point not be lost. There's no question that as the next set of elections comes closer and closer, politics is always not far from people's minds, and that can create additional burdens and hurdles. But crypto is a unique technology and unique industry in many ways. Perhaps the way in which it's unique that I'm most proud of is that it has largely remained a bipartisan issue. And so even as Democrats and Republicans have struggled to find common ground on well, just about anything else, they have worked together to get crypto legislation passed. We saw that with the Genius Act. We saw that in the House when 78 Democrats joined almost every Republican to pass the Clarity Act, a form of market structure legislation in that body. And so I'm confident that even as the politics will grow more intense as we turn to 2026, the focus on getting market structure legislation passed in the Senate will not be lost.
Okay, that's all for Crypto World today. We're back again tomorrow, and we will see you then.